Here we have the daily price chart for Kratos Defense and Security Solutions Incorporated, stock ticker KTOS. So here what we have is a stock that is starting to show some near-term moves lower. However, the longer-term trajectory here does remain focused on the positive direction. Last week, we did see an earnings release that was very important. There was some profit taking and perhaps some defensive positioning here in advance of that earnings release. So we did start to see some downward price movements within the stock. However, after the company did report earnings, we did see a massive jump higher here. So currently, what we're looking at is near-term highs that come in at 22.96, just ahead of the $23 mark. This did surpass the prior highs, which came in during the May 28 trading session, which would have posted at 22.78. So we did have a moderate higher high here. Of course, this movement lower was probably quite concerning for some people, but we do have to understand that this was occurring as the broader market was selling off. We were seeing a large amount of selling pressure in the small cap space and in the S&P 500 and in the technology space, to be perfectly honest. So movements lower like this are not surprising, especially when you're seeing an event risk like an upcoming earnings release for the company. So currently what we do have to look at here is the fact that we did manage to bounce off of some fairly critical levels. Specifically, we did see a slight breach of the 78.6% Fibonacci retracement that would be drawn from this triple bottom support zone all the way to these recent highs. So essentially that would be this price movement here. And here, if we're looking at the 78.6% Fibonacci retracement, we can see that this comes in right around the $18 mark. We actually did see a bit of a breach below this level with these spike lows, which came in at 1791. So we did see a bit of a break lower here. But we do have to keep in mind that some slippage is not entirely surprising with a stock like this. It is a small cap stock. There's a large amount of volatility in the market. And then in addition to that, as I said, you're heading into this earnings release event risk. So I wouldn't really consider this to be a breakout to the downside. We did see a strong bounce from here. So currently I would consider this as a support level that held. I'll kind of zoom in here a bit so that we can see it a bit more closely. This is an important level now to the downside because not only do we have a 78.6% Fibonacci retracement, but now we also have a point of historical support that would be quite critical for this stock. So if we did start to see a movement lower, right now I am recommending buying the stock at current levels. So I think that we can buy the stock at the Monday open. We were seeing a little bit of selling pressure into the Friday close. So we might even get a little bit of a lower open to start the trading session on Monday. I do think that you can buy right around here, 1970, 1950, right around there. And then I would start to scale into this position as prices continue to move lower. You have a couple of options for doing this. There are a couple of important price zones here that I want to point out. So one is this $18 mark. This is a very significant spike low that coincides with an important Fibonacci level. In addition to that, we also have this 61.8% Fibonacci retracement zone, which comes in very closely with the 200-day exponential moving average. As we can see, we did get a spike low below here. So some people would consider this to be a break to the downside, but I'm kind of avoiding that at the moment because we did see a very strong bounce from here, and we did not see a daily or weekly close below this level. So as you can see here, the 61.8% retracement and the 200-day exponential moving average have remained somewhat intact, at least on a closing basis. We did see this spike low here, so this is something to keep in mind. But on a closing basis, we have not seen this area breached. So this would be an area that could be used as a potential area to scale into the position. So currently we're looking at 1970. If you wanted to buy in again, the 61.8% Fibonacci retracement comes in at the $19 mark. And then from here, the 78.6% retracement comes in at the $18 mark. So we can sort of see $1 increments here that are quite important. If you were looking to scale out of the position on a breach lower, the level that I would be watching to the downside comes in at roughly 17. I would call this 1695. This area is a triple bottom support zone that we can see has been tested on 3 separate occasions. So this is a very important support level. Overall, I will be doing most of my buying in these areas. Roughly 18, roughly 17, and then roughly 16.95. I don't really mean to split these off into $1 increments like this, but this is just sort of how it's working out on the chart. Overall, my bias for this from a technical perspective will not start to change until we see a breach of this area down here, which comes in at 13.90. This is essentially the price low, which came in during the September 25th 2023 trading session. Overall, I would say that the structure here remains bullish as long as this level remains intact. So as things currently stand, just to re-summarize here, I would recommend buying in at the Monday open. This is what I will be doing. So roughly 1970 is the current market price. We could see further declines here into this $19 level. This is a very strong level of support because we did not see a daily break below here. We have a 61.8% Fibonacci retracement and the 200-day exponential moving average. However, we have to understand there is a little bit of risk here because we did see a breach here previously. So this next level to watch to the downside as far as buying in, scaling into a position could come in at roughly $19. From there, we can look at the $18 mark as well. So essentially what this could mean is you could buy in at 1970, scale into the position a bit more at 19, scale into the position a bit more at 18, if you wanted to do thirds, if you wanted to split off your position into thirds. If you then wanted to stop out the position below 1695, that would be a reasonable assumption. I personally am not going to be doing that. I'm going to be buying in at all four of these price levels. So from my own position, what I'll be doing is splitting off this trade into fours, and I will continue buying as long as this price zone at 1395 remains intact. I will not be stopping out of the position unless I see a break below 1395, and then I will be holding on to this trade for the longer term if necessary until the upside price target is met. Currently, my price target for this stock comes in at $27. So this stock does have a fair amount of upside here, given the fact that the company is now becoming profitable. And we have seen a bit of a downside retracement here so that we can get a lower price on the trade. Okay, so finally, I'm just drawing out the final price zones here so that we can see how this could potentially be structured. This all depends on how far out you want to place your stop loss and how many trades you want to use to scale into your position. I do recommend buying in at current levels because I do think that we can continue to see further upside here. If you wanted to continue buying on an approach to the $19 and $18 mark, I think that that's perfectly acceptable. I think you could even buy in at this 1695 level. However, if we did see a break below there, that would suggest that this triple bottom support zone has been broken. So that would be a warning signal. If we did see a break below there, I could completely understand if people wanted to start to stop out of the position at that point. So you could place your stop loss below 1695. I personally will not be stopping out of this position unless I see a break below 1390 because I think that is ultimately what would turn the technical structure into a bearish type of structure. So here's the current market outlook for Kratos Defense and Security Solutions Incorporated, stock ticker KTOS.